Hey, good day, everyone. Welcome to the Bert Salazar Show. My name is Bert Salazar, and I'm going to be your host today. We're going to be discussing a very important topic for small business owners throughout the United States, and that is the topic of IRS audits. They're becoming very common nowadays. As a matter of fact, I just found out that in January of 2024, the IRS sent out 5 million audit letters. So they're looking for money, they're looking for funding, they're looking for revenue. So they're going to be doing a lot of audits in the next 12 to 18 months. Now they hired a bunch of IRS agents, and they're all being taught, what to look for when it comes to audits. So one of the things that I'm going to be doing today is I'm going to give you some of the top things that you as a small business owner need to pay attention to in order to avoid a potential audit. And if you do get a potential audit, then at least you're going to have the ability to be fully prepared and to do it in a viable way. Now, audits are very common. Usually, what happens is that the IRS is looking for certain clues when you file your taxes on an annual basis, and that could happen if you file as an individual or if you file as a business owner. But this is primarily for you, the business owner out there who's watching this podcast at this point in time. Now, one of the things that you need to pay attention to are what are the algorithms? Now, you're never going to know what the algorithms are, but the IRS has certain verbiage, certain wording. They're looking for certain items in a tax return in order to make certain that that particular tax return can be audited. And if it's audited, what are the possibilities that they may be able to see something that nobody else has seen? So I'm going to be covering some of the major ones that I see on an ongoing basis. By the way, for those of you that may not know, we are a tax planning and a tax resolution firm. We solve all your tax issues by acting as your agent in front of the IRS. One of the things that I tell all my clients is that when you go in front of the IRS, obviously, while you're playing checkers, they're playing chess. And you always want to go in front of the IRS. You want to be prepared. You want to have somebody that can help you, somebody that understands the IRS and the rules and the regulations and so forth. So that's something that is going to be very critical for you, your business, and or your practice when it comes to that. So let's get to it right away. One of the audit things that all of you need to pay attention to would be certain tax deductions that are avoided based on your business industry. The IRS understands all the industries that they have to be able to review and report and so forth. So there are certain deductions that every single industry has in common. If you go about your business and you file your taxes on an annual basis and you don't number some of those deductions, that could be a red flag. The IRS could say, well, why, if this is a deduction that is viable, that is suitable for that specific small business owner, why isn't he or she taking it at this point in time? So be careful, make certain that when you're getting ready to file your taxes, that you follow all the potential deductions that you have the ability to legally claim on your behalf and on behalf of your business. The second one that I see often is home-based businesses and home office deductions. And this is a big one. After the pandemic, millions and millions of Americans decided to stay home. And when they decided to stay home, they wanted to do something to generate revenues. So many of them decided to create a home business. And that's a good thing because, America continues to grow and so forth. And also, even if you have a traditional business, but you want to take a home office deduction, you have the ability to do so. Now, definitely, you have to meet certain thresholds that are going to be very critical for the IRS and for you to consider as you start taking those deductions, but they're very critical for you and your business as well. Now you have to be very careful. You have to make certain that you follow the rules and the regulations when it comes to home-based business and also home office deduction. You don't want to commingle deductions that should be personal deductions or non-deductible expenses with deductible expenses, and that's a very gray area that the IRS is paying a lot of attention to. So be careful if you have either a home business or if you have a regular business, but you use your home office for administration and seeing potential clients and so forth. Just be very careful with that. Another one is the automobile business deductions. Record keeping is a must. If you have to go out because your business requires you to visit with clients, and you have to see clients and you have to do purchases and you got to buy materials and you got to buy things that are very practical for your business venture, then you do have the ability to legally take an automobile deduction. Now, record keeping is a must. One of the major challenges that I have with a lot of my clients is, they want to take an automobile deduction, but they don't have any expenses. They have no idea how to relate those expenses to their business practice. You drove 100 miles today. What percentage of those miles were business related, and what percentage of those miles were personal? The other thing is commuting. If you're commuting to and from your office, then that's not a deduction. Now, and there are many apps that you can find in the marketplace, but I use personally for my business, I use Mile IQ, and I'm not endorsing, I don't get paid by them, I don't receive any fees from them, and there are many other apps that you can download on your app phone and keep it readily available. What I have gotten used to is every single day, at the end of the day, I go into my Mile IQ, and if I slide to the left, it's a personal expense, and if I slide to the right, is business. So that way, at the end of the year, you can produce a complete report that you can then submit to your accountant or your CPA or your enrolled agent for them to do the taxes and provide you with the automobile deductions for the taxable year at hand. So that's something to keep an eye on and make certain that you have the right numbers and that you have record keeping. Misclassification of employees. This is a big one. This is a very, very big one. Many times I have seen it because I have had to do audits. When I get a new client, I review their tax returns in previous years, and I have seen it often, actually way too often, where I see employees misclassified. And at the end of the day, if you can tell someone what to do, when to do it, and you provide the tools of the trade for them to do it, they're really an employee of your company. They're not an independent contractor. They're not someone that you can just issue a 1099. So you better be able to understand the rules of engagement when it comes to that, because you don't want the IRS coming in after you 3, 4, 5, 6, 7 years later and asking you to pay payroll taxes and penalties going all the way back to the first year. So it is very important that if you're going to hire staff in your company and you're going to hire people in your company, that you understand the boundaries between what an employee looks like and their definition, and also what an independent contractor looks like and what the definition is as well. I'll give you a couple of more. Underreporting income, severe penalties and interest charges on that. Make certain that at the end of the year, you keep a tally. Obviously, most of the clients that I deal with, I use QuickBooks, and they either have a bookkeeper or someone internally that can do their books, because at the end of the day, you don't want to shortchange the IRS when it comes to those taxes you may owe because of the additional income that you failed to report. And not only that, you're going to get penalties, you're going to get fees on top of that. So it's something that is going to be very critical for all of you to keep an eye on. And then the last one I'll talk about today, and I'll have more of these as we go along, but the last one is failure to maintain books and records. You talk about getting killed in an audit. Try to show up to an audit in front of the IRS and have nothing to show for, you're going to be in deep trouble because you're going to have to prove to the IRS, those expenses that you said you had that you reported when you file your taxes, and you have no way of proving them at all, and you're going to be in a situation that you don't want to be in from a business standpoint. Now, what I try to tell my clients often is, look, there's a big difference between tax avoidance and tax evasion. Tax avoidance, I do every single day of the week because that's what our clients are paying us to do. How can we stay within the law, make sure that we can maximize the net income and the net profits to the corporation while providing the IRS and benefiting from all the deductions and the credits that the IRS gives us all based on all the rules and regulations that we can take. But by the same token, if you go above certain level, now you're going to start going into tax evasion, and the big difference is about 10 years in prison. And that's something that you don't want to do for yourself, because if you end up going to prison, then your business is going to go down the drain, as well as your personal life. And, we try to do this on a regular basis and provide you with information because at the end of the day, I feel very strongly that our job is to kind of help you change the way that you see things. Because if you change the way that you see things, the things that you see change. If you did like this short video with the information that I have provided, please feel free to click on the link and you can download our ebook. And once again, Bert Salazar, and I'm looking forward to seeing you soon. Take care and you have a great day.